Yes, good afternoon, everybody, here on site as well as online, where I hope we have quite a bit of people. So I'm Kadri Lindpere. I'm the Managing Director of the Estonian Venture Capital Association, and I am very happy to welcome you all here to the launch of the 2022 numbers or report of the Baltic private equity and venture capital funds. This year we had a really wonderful pleasure to work with the KPMG deals team in the Baltics, partners or the team of which will also be presenting the report here today. And also I would like to really thank all the funds that submitted their data, because without that data we would not have all this material as well as the information for all of us to sort of promote and sell the region to the world. I would like to thank very much also our Baltic VCA-s, Gerda and Anita, so colleagues from Latvia and Lithuania, as well as Kristjan, Kalda personally, our board member, who has been actively also working on the report with us and then commenting on the data. Without further ado, I would like to invite Dimitri and Johanna from KPMG here. Also would like to thank Mikkel from your team, who is not here but did a lot of job, and I would like to thank also Deloitte from who we've been working with in this report with this report for the past 3 years. So all this together is a really good data, I think, that we can now already be proud of. So here is the report launch, and I hope you enjoy it.
Thank you, Kadri. Good afternoon, everyone. It is a real pleasure for KPMG to have had the opportunity to work with the Baltic VCA organizations and the Baltic fund managers to put together the market overview report for 2022. We did put a lot of effort into it, so hopefully the main report will be interesting, and today we'll just present you with the highlights of our analysis. But before moving on to that, again, I would like to sincerely thank the three Baltic VCA organizations, all you fund managers, for providing the data and answering our follow-up questions. That really helped. Yeah, I'd like to thank Deloitte, because they did prior year's reports and they laid the groundwork for the methodology. And finally, I'd like to thank my KPMG colleagues on stage with me today and those watching online. Also, before I start off, I'd like to mention that each year we've been preparing this report, we've been improving the methodology, and the quality of the data has been improving as well. In addition, we've added funds to the analysis, both new ones as well as existing funds that didn't take part in previous years. Therefore, there might be some variances between prior reports and this year's reports in historical figures, but that's just the kind of explanation behind it. And I recommend looking at the main body of the report if you want to find out more about the methodology and the limitations. But without further ado, we'll kickstart. And firstly, we'll look at fundraising. So, a record year of fundraising. Baltic VC and PE funds raised or surpassed the 2 billion mark, with cumulatively raising 2.23 billion since we started gathering data in 2010. Now, with regards to sector or fund focus, buyout funds remain the single largest category. They make up circa a third, or around 700 million, of the total cumulative capital raised. What is interesting, though, is the increase in capital raised by VC funds, especially early-stage VCs. You can see that since 2020, when they started off at 330 million, the funds raised have nearly doubled by 2022, reaching over 650 million. Now, on a fund manager level, BaltCap has been, both overall and on a private equity perspective, the highest fundraiser. Karma Ventures, on the other hand, has raised the most to date on a VC level. And in 2022, Contrarian Ventures, for their new Net Zero fund, raised the most capital. Now, we looked cumulatively, so let's have a deeper dive into the year-on-year changes. Well, again, we have a new record, the largest number of active funds in Baltic history. 84 funds are active at the moment. This year, they raised a total of 298 million euros. That was a 13% decrease from the previous year. But what is really exceptional is the amount of funding raised by early-stage venture capital funds. In total, they raised 244 million euros last year. That's a new record for Baltic VC funds. A total of 12 new VC funds fundraised. Some of them include Contrarian Mentions, I already mentioned, but also Trend Ventures with their second fund, Super Angel, as well as Baltic Seed Fund. Now, what's interesting about these new funds is that most of them have a multi-country strategy and are actually transitioning from being pan-Baltic to being pan-European or even global funds. From a PE perspective, the year was a little bit more subdued. An amount of circa 54 million was raised in a year. That's 180 million less than in the prior year. And you can attribute most of it to BPM, who raised its second mezzanine fund. Now, the maybe subdued year for private equity funds can be explained that in 2019 and 2021, quite a large amount of funding was raised by the main PE fund managers, which means that at the moment they are mostly either in investment stage, but also in divestment of their earlier funds. But that means that in future years we can see an uptick in the private equity fundraising activity. Now that we've know how much funds they've raised, let's look where the money comes from. Well, you can see that from a historical perspective, we have developed kind of three main funding sources for Baltic PE and VC funds. It's pension funds, private individuals, and government agencies and institutions. And government agencies and institutions remain a key anchor investor for Baltic funds. They make up in the last 5 years, they made up circa 34% of total funding raised. But what is important here is that especially in the last 2 years, there has been a wider diversity of funding sources. We can see that funds raised from private individual and pension funds has increased, but there are also new sources of funding entering the Baltic PE VC space. We can see that this year, the capital was raised from sovereign wealth funds. A high amount was raised from the funds of funds. In other asset managers, we have foundations. So we're actually seeing more diversity in funding sources. Now, could there be a difference between PE and VC funds? Well, let's have a look. When we look at venture capital funds, I think they bring home really the point that I just mentioned, the diversity in funding sources. Even though historically, government agencies provided the most funding, for 2022, it was only the third category where funds came from. From private individuals, nearly double the amount was raised. Also more was raised from pension funds. But it's important to look again below government agencies. You can see funds of funds, other asset managers, foundations, sovereign wealth funds. In total, from the 10 categories presented, for 6 of them, funding has increased year on year over 100%. Again, the increase in non-governmental funding shows us that we have a maturing PE and VC ecosystem, and we see that our fund managers are gaining more and more credibility and are able to source capital from different regions and sources. And actually, when we talk about geographic location of the investor base, for venture capital, 48% of the funding in the last 5 years has come from the Baltics. For private equity funds, that figure is 65%. For private equity, we can see that the sample size, especially for this year, wasn't that large. And in general, it followed the historical trend that most funding has come from government agencies and pension funds. But now we've looked into fundraising, so let's have a deeper dive into where the funds invest.
Thank you, Dimitri. So moving on to investments, 2022 was a real record-breaking year for Baltic investment funds, as the total amount invested into Baltic companies reached 212 million euros. And although the number of investments decreased slightly from 244 deals in 2021 to 222 deals in 2022, the average investment amount was the highest ever recorded at just under 1 million euros. While investments increased in all 3 Baltic countries, it was Lithuania that saw the highest growth, both cumulatively as well as in 2022. The growth in Lithuania was largely driven by a number of large alternative energy and real asset investments. A few examples of those are Invalda's purchase of Egles Sanatoria, as well as Modus's investment into a large solar portfolio located in Lithuania. Other notable PE investments in 2022 included LITHUANIA's investment into the climate solutions provider Estvca, as well as BaltCap's purchase of the book retailer Rahva Raamat. On the VC side, we saw that Karma Ventures topped the charts with investments into CyberX, Doom, and Jobatical. And also worth noting is Chance Ventures' investment into the influencer marketing platform Modash. When looking at investments by stage, we can see that in 2022, it was PE investment that dominated the Baltic investment landscape, with growth and buyout investments making up about 75% of total funds invested. It was also a record high in terms of the number of growth and buyout investments, explained by the fact that 2021 was an unparalleled funding year for private equity, and so by 2022, funds had most likely moved on to an investment stage. Meanwhile, VC investments saw a slight decrease, both in the amount invested as well as the numbers of investments. And this can be explained by the fact that there was a high uncertainty due to the geopolitical and macroeconomic situation, coupled with the fact that there was a lag in the founders' valuation expectation adjustments within the high-risk VC space. When looking at investments by sector, we can see that the Baltic energy and environmental sector drew the most investments at 27% of all investments in 2022, which is 57 million, followed by investments into the computer and consumer technology sector at 39 million, and investments into the consumer services sector at 32 million. Baltic PE funds actively invested into the energy and environmental sector, including a large number of renewable energy investments, followed by investments into the consumer services and infrastructure and real asset sectors. On the VC side, about 2/3 of investment went into the computer and consumer electronics sector, which in itself also includes software, tech, and SaaS investments, followed by investments into the financial services and consumer goods and retail sectors.
Great. So some of you might remember that in the first slides I mentioned that Baltic PE and VC funds are starting to look more outside of the Baltics. Well, let's have a deeper dive into that. Well, again, it was a record year for outbound investments as well. 69 million euros was invested by Baltic PE and VC funds outside of the Baltics. In total, over the last 5 years, Baltic PE and VC funds have made over 300 investments outside of the Baltics, with a total amount invested of 234 million euros. Now, if we look at the investment destinations, then the most popular ones are quite close to us, our neighbors, Finland, Sweden, Denmark, Poland, Norway. You can also see the US in the list. I have to put a disclaimer here that the US does include companies which might have originated in other regions, also in the Baltics, but then they changed their headquarters to the US, so they are seen under US in this data. Interestingly as well, in 2022, PE and VC funds invested into 12 new countries. You can see a sample here, some of them close by, Greece, Italy, Slovenia, some of them quite far away, Azerbaijan, Kazakhstan, Malaysia. Now, if we look on a fund level, then VC funds have been relatively more active investing outside of the Baltics. In total, over the last 5 years, they've invested close to 170 million euros. Nordic Ninja has invested the most outside of the Baltics, followed by Karma, Trend, Terra, Contrarian, and Startup Wise Guys. Now, some of the investments, outbound investments that have happened in 2022 that I can note is, for example, Nordic Ninja's investment into Einride, the manufacturer of autonomous trucks based in Sweden. Also, Karma Ventures' investment into Druid, a developer of conversational AI based in Romania. When we look at PE, then in total, they've invested in the last 5 years close to 80 million euros. Now, that's quite a bit below what VC funds have investment, but we have seen activity pick up in the last few years. You can see that we have in the top list all the main private equity managers, including Involda, BaltCap, and LITHUANIA partners, who have made quite substantial investments outside of the Baltics.
So what did the average Baltic fund portfolio company look like in 2022? As you can see, on average, it employed 75 people, earned a revenue of 10.4 million euros, and paid 1.3 million in taxes. When we look at the total number of active portfolio companies, there were 820 at the end of 2022. 599 of them were located in the Baltics, and about a quarter, or 221 of them, had their headquarters outside of the Baltic states. When we compare the companies in the Baltics and the outbound companies, we can see that the Baltic companies performed stronger in all 3 categories. This can be explained by the fact that there was a large share of PE companies concentrated in the Baltics, and those tend to be larger, more established, more developed, whereas, as Dimitri mentioned, there was a large share of VC investment going outside of the Baltics, so these companies tend to be earlier stage and smaller. When we look at the capital available and capital invested, we can see that Baltic funds in total have raised 2.2 billion since 2010, and of that, about a billion has already been invested, and so that leaves Baltic PE and VC funds with 1.07 billion in dry powder. And although some of that will be used for, or already has been used for add-ons, it shows that there's still a lot to be invested in 2023 and beyond. When we look at dry powder by category, we can see that most of it is concentrated in early venture funds, nearly 400 million, which makes sense since 2022 was a record fundraising year for early venture. Whereas for late venture and infrastructure, we can see that the amount of dry powder has been decreasing slightly, meaning that they've reached or are reaching the end of their investment stage. When we look at solely on recent fundraisers, we can see that out of the 14 companies that raised money in 2022, 9 had already made drawdowns within the year. However, that only made up 8% of total capital invested in 2022, meaning that there's still a lot of capital to be deployed within the coming years.
Okay, so we've talked about fundraising, we've talked about investment, so at some point we need to divest our assets to earn our returns. So let's have a look at what the divestment activity has been. Well, 2022, we had 50 divestments at an at-cost value of 60 million euros. Now, it is a slight decrease from the prior year, but if we kind of look on a broader time scale, then it has been a really strong year for divestments. Now, having analyzed the data, one interesting thing we noticed is that close to 80% of all of the divestments happened in the first half of 2022. This might be explained by the fact that given 2021 was an exceptional year for investment, there was some slippage from it where the uncertainty caused by the macroeconomic and geopolitical environment and the valuation adjustments came into the region with a lag, and that lag came over somewhere in the summer where we could see more uncertainty coming in, funds becoming maybe more hesitant of divesting their assets, wanting to see, is it a long-term change or could this uncertainty end quicker? Now, looking into more detail, from the 50 divestments done, on a number basis, a majority was VC funds divesting, a bit over 50%. But as you can guess, of the 60 million value at cost, over 70% were private equity divestments. With regards to exit types, then in 16 cases, and the most popular was a sale to a trade buyer. That was followed by management or owner buybacks, and then also a popular use was a sale to another private equity firm. It's also worth mentioning that there was an increase in write-offs. A total of 9 write-offs occurred in the year, which can be explained again by the difficult macroeconomic and financial environment, with growth rates being downgraded, it being harder to raise capital, especially for these kind of higher risk startup investments. It might have been a very, very difficult year. Now, when we talk about some of the notable divestments, again, on a PE level, BaltCap has been very actively divesting its assets. You can see they divested Energia Verde, a biomass plant operator, Uprent, BPT. In addition, on VC, there have been a number of divestments. One I would note is the sale of Nordigan, a Latvian fintech, to a global payment solution provider, Go Cardless. Again, that was an exit for Change and Super Angel that were investors in Nordigan. But before we move on to summarizing our highlights and discussion, there's one important topic we still haven't touched, and that's gender balance. So within the analysis, we looked at it from 3 perspectives: fund level and portfolio company, and that divided between Baltic and outbound. Now, what does the data tell us? Well, it tells us that if we start from a fund level, not much has changed since prior year. We have seen that female representation on fund staff has increased slightly from 25 to 25.6%, but female representation in investment committees still remains below 10% and has even decreased slightly from 9.7 to 9.5. When looking at portfolio entity level, we can clearly see that there is quite a wide divide between Baltic and outbound companies. That is especially evident for female representation in senior management positions. For example, in the Baltics, we can see that close to or over 14% of portfolio company CEOs are female. The figure for outbound investments is below 7, and it has reduced compared to the prior year. The change is not, or the difference is not as large in kind of board level management, but still Baltic companies perform much better with 16% compared to 11% for outbound portfolio companies. To be honest, to summarize kind of this discussion here on gender balance, we can say that steps have been taken, but there's definitely a long way to go and a number of improvements to be made.
So before we end our presentation and hand over to the panel, there's a couple of key takeaways from the report that we would like to leave you with. Those being that despite the difficult macroeconomic and geopolitical background of 2022, Baltic funds have raised 2.2 billion since 2010, of which 212 million was invested in 2022. There's been a strong trend of Baltic funds moving outside the region, with outbound investments over the past 5 years reaching 234 million euros. And lastly, there was 1.1 billion euros of dry powder still to be invested by the end of 2022, anticipating the sound strength of investment over the coming years.
Thank you. Questions? Okay, we have some time for questions. So please, if any of you have questions, put your hand up and we'll hand you the microphone.
Hello, Tere. I have a question. If ECG, like methodology, affects decision making somehow?
ESG methodology?
Yeah.
Well, to be honest, ESG is not an area we actually analyzed within the report. I would guess that ESG is becoming, or not guess, but from the reading and what's been going on, ESG is becoming a more and more prevalent topic, not just because of regulation, but overall investors being the investor base of Baltic PE and VC funds demanding it more. So therefore, once investors want funds to be more active within ESG, this will play a more important role. And we've seen, for example, in deals that we've taken part in as KPMG, ESG becoming a more important topic. And if companies aren't up to par in ESG perspectives, either a very detailed plan needs to be made on how they'll be par in a specific time frame, or even investments are not made or postponed because of ESG. So I don't know if I answered your question, but
maybe a small one. I got maybe wrong impression that there is some kind of focus on deep tech for local venture capital actors. Am I correct or wrong?
Yes, there is. I think one thing within the data and an element that we're working on is that at the moment, a lot of kind of deep tech and SaaS companies are put into one category. So I think one thing we need to work for in the future is kind of categorizing it a little bit broader in order we see inside the individual categories. But definitely there is a trend on deep tech. There are specific deep tech funds being set up in the Baltics and companies in the Baltics being active. But yeah, as again, within the data, we don't specifically bring deep tech out as a separate category.
On the slide, there was early stage, late stage, and growth stage VC investments. Mm-hmm. By the way, I'm Sven Illing, and so my question is that I thought that in the Baltics there is no late stage and let alone growth stage VC investments, or how it's divided, like where the line goes.
Sure. So growth is not actually seen in VC; it's PE. So let's say it's private equity companies making minority investments into companies that are, let's say, kind of in between being, they're not really a startup, they're not a maybe established market player. There are somewhere in between, and that's where kind of private equity capital comes in. So they often don't have a majority stake, they have a significant minority stake. And we have, I know BaltCap has a growth fund. We know LITHUANIA does growth investments. So there is a category on that. With regards to late ventures, I think we see some funds making later stage, let's say, than seed and Series A investments. But of course, the later stage we move on to, it becomes more difficult because the funding requirement per investment becomes quite large. And from the data, you could see that the proportion of late venture investments was very small compared to early stage and buyout investments. So I think growth and late venture are growing categories, I say, in the Baltics.
One idea to our venture community, and I was last week in Munich, and there were these deep tech investors and community builders around Europe, and one idea that was discussed that new KPI is, well, at least for some it was new, to measure how much female founders own equity in the companies, because everybody has been for quite a long time by now seeing CEO positions and co-founder positions, but it turns out that it could be that female founders have less equity. So this is also something that is now measured, and I don't know how much our PE and VC firms are measuring this, but maybe this is also something that to look into.
Thank you. Any more questions? I think there's Kadri. There's a question already.
Oh yes, sorry. They can't hear you online, otherwise you have to have the mic.
Hey, thanks. The amount of dry powder that you mentioned, is it based on the facts that that's the money on the bank accounts, or there's a or maybe you know if you have been exploring the probability of the dry powder transforming into failed capital calls, and what's the kind of potential percentage of the drop from the existing number of the dry powder to the real one? Maybe if you have been exploring that. Thanks.
I don't know, to be honest, we haven't really been exploring that. I think what the data that we had been given by the funds kind of brings out the amounts that they have either already invested or the amount they have already committed. And then everything else that remains is available capital. Of course, some of that capital, as Joanna mentioned, is set aside for add-ons for similar fund. But the rest we treat as available capital. But of course, there might be a probability of as you mentioned, that amount decreasing. But again, that is what has been reported and how we measure the data.
So, do we have any more questions, or should we move into the panel discussion? And we can take some more questions, I guess, later. Yeah. So, thank you so much, Johanna and Dimitri, for a great presentation and for a great work you did. So, I would like to invite now our panelists here. First, I would like to invite Gerda, who is our managing director from Lithuanian Venture Capital Association. We were hoping to see her in the beginning to welcome you here too, but I guess the plane did not arrive on time. You made it. So please take a seat and let's invite now Kristjan Kalda from BaltCap, who, as I said, is also sort of an advisor in the project for us for years already in preparing the report and then commenting how things in real life work. Then I would like to invite Ernest from LITHUANIA, also a partner, and last but not least, our moderator, Kadri Lindpere from KPMG. So.
Is it working? So, good afternoon from my side as well. So I make a very short introduction. First of all, I like to emphasize that why research generally and this research is important. And there was interview on Bloomberg on Monday with Mervyn King, who used to be head of Bank of England, and he was asked that why the central banks are in trouble about this transitory inflation right now. And the answer was quite surprising. He said that we lacked academic research. So nobody could foresee, nobody could understand how this transitory inflation, how the supply-demand kind of like mismatch worked. So I think that sometimes we focus very much on enterprises, our own business and etc. But research is important. No player is greater than game. So this is no enterprise is more important than economic kind of like environment. And secondly, rules of engagement. I like to be, it's a little bit like energetic and etc. So how we move is that we move from general to specific. We start from overall kind of like pictures and we move to geographies and we look at the timeline, how this kind of like investments have developed. Then we move into the sectors, final specific issues, exits. Do we have money, or what are the kind of like future challenges? And then we end with gender. So please actually ask the questions. I don't think that we need to wait until the end to ask the questions. Please ask them as this kind of like discussion goes, but please remind that these are subjects, so if you jump to the end, so we might want to wait with that question. But let's kick off. So the first question actually to everybody is that what was surprising in this report? What were the highlights for you?
So for me, it was two things. That was a tremendous year for VC. I think it was unexpected given the concerns we had when all the macro turmoil started. And I saw like very heavy endeavors when the funds were like fundraising by the end of the year. So seeing those numbers, it was kind of unexpected in a positive way. It looks really good. And now when you can see overall data around different assets, you can see that VC is keeping up with the private equity, which is a bit even bizarre, I would say, given the fund sizes. And the second thing, I think it's a national sentiment that a significant part of the investments last year went to Lithuanian companies or projects. So it was a bit also good sentiment for us to see how it develops. So very positive, I think, two messages from me.
Yes, and may I add that the report itself is getting much better. So thank you, KPMG. And I'm just wondering, then, is it because our community is developing, or because KPMG is doing good reporting? So why?
We are also like emailing asset managers like bunch of times, and we are not letting it go. So just like put the numbers, and I think this activity helps a lot. I can see the kind of even development through the years. It's the second year I'm doing that, so they are now like asset managers actually got realize that it's really, really important. It's not like last minute job or something like that. So I think that's a bit helps with the quality, I guess, getting all the data, all the funds reporting.
Yes, so actually we have to thank the managing directors of Free Baltic VCA-s as well, absolutely, for putting pressure on us.
Yeah, I guess I wasn't really surprised, but maybe the two things that stood out. First of all, the 2022 looked better than expected, but I think Dmitry made the point that actually lots of the activity took place in the first half of the year. So if you looked at the second half, it would probably be different. And secondly, always looking at this report, because it's so focused on the Baltic funds activity only, at first glance it seems like it's missing lots of VC and PE deals that were done by funds that are from outside the Baltics. But maybe that just shows also that for the local Baltic funds, actually the opportunity is even much bigger than we're right now touching and realizing. And I remember last year there were questions about whether this dry powder of 600 million is not too much. But I think the fact that there's so much foreign activity also means that it's not enough.
Okay, and let's kick off actually. Ernest, with you, there are actual differences between all three countries, and I think that Latvia is a little bit outlier. So you promised that you will a little bit justify yourself. That why do you think that Latvia is a little bit like lagging behind?
Always embarrassed when I'm in this position. But I guess the positive for us is that Lithuania and Estonia is not going to surprise anyone anymore, but Latvia still has the opportunity to surprise everyone. I did think about what's the right approach, and obviously, this is just a symptom. It's not the kind of cause for. This is just a symptom of, I guess, where Latvia is. Maybe it's hard to compare Latvia with Estonia. It's hard to compare anyone with Estonia. Estonia is just such an outlier in worldwide. Whereas Lithuania is a bit bigger. It is maybe 50% bigger than Latvia. So maybe that's a bit of an excuse. But also this is just one side of things, and. In either case, Latvia feels in a much better place than we were 7 or 8 years ago in terms of having very early stage startups, having later stage startups, and also having mature companies that are interesting for private equity funds. 7 years ago when I started, I think the universe of potential targets was much less interesting in Latvia.
Yeah, so you want to comment, Kristjan?
No, for me, the Baltics is one market. I mean, sometimes it's Lithuania, sometimes Latvia, sometimes Estonia.
Yeah, actually, I would add on that we are always thinking about pan-Baltic kind of market because it's too small to have like different tiny countries, comparing and looking how it's done, because majority of deals are funds are pan-Baltic, so maybe this is not a question.
But let's continue then with geography. You could say that pan-Baltics, and you could add that it's pan something else. So how do you see the geography kind of developing. There was this little bit downbound, more investment. We saw something in Stans, we saw something in Finland. But what was maybe surprising to me is that nobody was in India or kind of like usual places or Africa, which are not the fastest development. So who wants to kick off the geography? Wants to?
Okay, I can.
Turn the globe.
Yeah. Of course, we see that the Nordic countries are our main outbound investment targets. So Finland and Sweden were like the two largest countries for outbound investment. So, and that's quite logical, I would say as well. So this is how we get more Nordic by making our own investments into like old Nordic countries. So I mean, this is one way to integrate, and I see that this is going on pretty well. And of course, we see some more exotic investments. So this is how our network becomes global. I mean, it's good to see that outbound is actually developing quite nicely.
I think it goes along with the maturity of the market, and with the experience of the asset managers. What I can see and feel that usually asset managers are a bit hesitant to go to terra incognita, and because they don't know the business there, the business environment. It matters. So usually they are a little bit hesitant. But if you fundraise another fund, you have like more portfolios, more different portfolios, more experience. I think you're then getting a bit, cozier in your home market. Then you go to the closest market. You think that it's Nordics, and I think it's step by step. And then you are going to invest into European, more into European companies, and maybe then other regions. So I think it's a gradual process, and I think we're getting there. Yeah.
Nothing to add. I don't think you'll see much Baltic activity in India.
Why? It's a big country.
This decade.
And should we actually?
No. It's just to kick it off. No, it's good. No, it could of course cut both ways. But we had also a little bit short discussion about inbound. So basic discussion was that we see quite a lot of UK and US and Polish, but not very much Scandinavian. Why is that? Ernst, maybe you.
Yeah, I mean, I'm curious to hear what everybody else thinks about Scandinavia. But I guess Scandinavia has always been a bit on and off. In some ways, they have been actively investing here already in the 90s. Firstly through banks and I don't know, forests, etc. On the other hand, sometimes it seems like they're missing in action. Hard to say. Why is that? Well, I guess last year it was probably because of geopolitical reasons.
Well, I know what is the reason, and it's the same old. And the reason is the following: that if you raise like a local Scandinavian Nordic fund in Sweden or Norway or Finland, then you are not allowed to invest into the Baltics because it is not your home region. But if you raise an international fund, then it is too large to invest into the Baltics. So you are kind of in a limbo, and also PE and VC managers kind of cannot invest easily here.
Yeah, I think it's the obvious reason and we sometimes forget that Nordic private equity market is a bit same as Baltic. We sometimes do not see it, but in terms of fundraising, that is a heavy fundraise from their national sources. And this actually limits their ability to invest outbound. So they're a bit similar to us, a bit more mature, but a bit similar. So that's why. But as we can see in VC space, Nordic VCs are scouting Baltics, and I think it's very, very visible in Estonia, and I think it's more visible here. But we noticed that action in Lithuania as well. So maybe some action will realize in few upcoming years, because as we started to invest into Nordic countries, I think it's time for them also, to do some cross-border movements around. So yeah. We will see in a few years.
Okay, anybody from the audience? No, kind of geography, it's always okay, we have. There are a lot of countries.
I'd just like to clarify a bit. You're saying Baltic is a one market, But if, for example, legal environment is truly unified enough, also in Estonia we have some taxation things coming, for example, etc. Legal aspect.
On some terms, it's unified, in some are a bit fragmented. So we cannot say that like the business environment and taxation environment, especially in the our asset class, like surroundings, what matters for us, like fund regulation and so on. So I think a bit differs, not like on very huge terms, but there are like nuances that we need to fix to have like properly functioning Baltic market in legal terms or business environment terms.
And may I add that if you invest in the United States, and each state has different legislation, so I wouldn't say that because of we have so much EU legislation nowadays that the differences are massive when you compare investing in the States or in the Baltic states.
Okay, so if there are no more geography questions, let's move over to timeline. So basically it's about past and future. And about the past is that kind of report specifies that government agencies have been kind of main investors. How to see that it will change, or will it change?
Does it include EIF and EBRD, government agencies?
It does include,
Okay.
yeah, I think so.
Yeah, I mean, obviously, all of us expect more private money, but I think even still in the Western Europe, EIF remains quite an active investor, also in bigger funds. So probably I would expect that to remain as well. I think overall, looking from how diversified the investor base is, I think there is not much we should be complaining about. Pension funds are able to relatively freely now invest in the Baltics in private equity funds. Yeah, maybe I would expect at some point the kind of high net worth individual family offices to become a bit more active. I understand some funds that have tried to raise, they had to do feeder funds, which is a bit more complicated. So they couldn't just raise big amount from one family, but feed together many.
So as we saw in the charts and the data, that's a very positive kind of development, that the huge codependency from state resources or governmental resources is decreasing. So it's a very good sign of maturing, and it's time to do that. So we can clearly see that from the 2022 fundraising, especially from the VC side, we see a bunch of new categories of investors and how much they grew from the last period. So it's amazing actually. It's just a very, very good, I think, milestone in the market in general.
I think that EIF and EBRD will remain as important investors for coming years. What has been very positive in past, say, 5 years is that local pension funds, the Baltic pension funds, have been actively looking at private equity and venture capital and investing into various funds. Some have invested, I would say, quite handsomely into various. Some are doing their first steps. But this is something that is expected. But first, we are supported by the local Baltic investors. And then, of course, comes the second step, that can we also lure investors from outside the region. And I think that in past few years, we also see a growth of interest in LPs coming from outside the Baltics. Of course, we need to show the results, and these results have to be at least at the par with other European funds. And so it all kind of, even this reporting here, it all helps us to raise funds for the next generations.
Yeah, and let's continue with you, Kristjan, because now you have to justify yourself. Why there are no more PE funds? I think that VC funds, when I look at the reports, they multiply, and nothing changes in PE.
Well, if I take 2009, when we started with Estonian Venture Capital Association, and about the same time Lithuania and Latvia as well. So we had, I would have to say, one state-owned investor, BaltCap, and Ambient Sound Investment, as investing in Estonia. So from there, we have come a long way. So we have many fund managers, successful fund managers. We have a vibrant community. So if you look where we come from, I think we have taken a huge step forward. Obviously, there can be more, and that would help the market if there are more players. So because there is also more liquidity on the market if there are more players. But let's see. But again, in a historic context, I think we have done pretty well in past 5 to 10 years.
Okay, but let's now move then to the future. And question to everybody once more, that what could be the 3 main developments in the future, both in short and long-term perspective? And by long-term, I mean by the end of decade. Anybody wants to go first?
I would like to see more later stage funds establishing or strengthening their assets in the Baltics. I can see that this comes out of a bit out of picture when you see the stages, and I know the logic behind that the larger investors will come and follows the investments, and we do not need to have the later stage funds. But as we are seeing those very healthy and huge ecosystems, and we want to be that, they do have those, and so that's why we need to think about that. I think that's a goal in VC space, and it's a good question you asked about private equity, but private equity buyout funds. So those are, I think, a bit now. They're not much off, but maybe it's good. It's just recollection of the market possible, but maybe not. Maybe there are some targets, and we need to cover that. Also, I think one asset class develops, and it's private debt, and it's interesting to see some developments in Lithuania that it's becoming bigger. Actually, given the circumstances and the variety of vehicles company needs to be funded, so I think it's also important to have for a healthy ecosystem, because if you look at now, mezzanine is not like very strong one in the Baltics in general, but it should be developed more, and I think it will. Even seeing in Lithuania, what is happening in Lithuania right now about the plans and rumors what is going to be next. So I see the possibilities there.
Actually, you touched a good point, Gerda. So maybe we could have more different strategies. So not just a buyout and then the VC, but we already have a secondary fund, but maybe also a debt fund, real asset funds. So there are several strategies that are not yet covered in the Baltics. So that would also diversify our kind of community offering to our investors.
It seems like we're making a wish list, and to add to that wish list, also more developed public markets would be great. I think it's probably, especially right now and over the last year, there are much more take-private deals than IPOs. Maybe that will continue for some time, but eventually it would be nice to also have an IPO as a way to at least partially liquidate your position.
Yeah, which actually leads us to the next or the most kind of dynamite section, finance. But before we go there, anybody wants to ask questions about future? Better bets, new bets? No. Then, because exits was actually one issue we discussed in preparation. So, and you mentioned this kind of like public markets, which is a natural place to exit. So, and the discussion went that we have had very few exits, which actually makes it harder to attract new capital. So what could be done about it? Kristjan, yeah.
Actually, I thought about it because obviously, if you look at the report, it seems that we have done a pretty good 2 years of exits, 2021, 2022. But still, kind of, I hear complaints from our local LPs that kind of money is not coming back. And I was thinking about it. Why is it so? And there is one chart that is not in this presentation, but is in the final report that shows when the funds actually have closed. And we see that most of the capital and most of the funds have been closing in past 5 to 6 years. And then I started to wonder when actually on average, capital will be, the cost capital will be returned to the investors. So I was quickly looking up statistics. So we are looking at a ratio called DVI, or distributed value to invested capital. And it turned out that in small buyouts in Europe, the median is 7 to 8 years. And in venture capital, we looked up from another source, is also like 8 years. It's like approximately. So it means that actually we cannot even expect currently that the capital is yet returned from these funds, because on average statistics doesn't support it. So therefore I would say that this cycle going on when our institutional investors get their money back and can invest into new funds. So there is some gap. They kind of aggressively invested into new funds, but then it takes this same 7 to 8 years, if we are the same as elsewhere in Europe, to get the initial capital back to our investors. So that's kind of one take I had from this report.
Somebody?
I would just add that it's not only Baltic kind of issue or something like that. When you read global tendencies, it's the same issue everywhere. Why are you not exiting? Why are my money not returned? And why it's sitting in your fund for this long, and it's not competitive asset class, and so on and so on. So this is also everywhere, especially in the last year. We've seen so less exits than comparing to 2020, 2021, globally, just globally. So it's not like unusual year for us as well. And I think that, like referring to what Kristjan said, that I think maybe we should think about like prolonged cycles and what the cycles actually is. Like we have it in theory, and then we're like acting on it, but maybe there are like circumstances that changes the game, and the cycle is a bit more kind of longer one, for obvious reasons, you know, because of the turmoils and.
Okay, but then the next natural question, of course, is that can you exit if the valuation is down? So what has happened to valuations, and can you see any light at the end of the tunnel blinking? Ernest, do you want to go first? Any light? What has happened to valuations?
Yeah, no, I guess it's clear if you look at the statistics across Europe that the first quarter this year was the lowest M&A activity since 2009, or maybe ever. And then also the fourth quarter last year was the lowest for a long time. And probably, I mean, you also see, but I don't see that much activity going on in the second quarter. It's probably something similar. I mean, of course, there will be light at the end of the tunnel in a few quarters, maybe sooner. But maybe what's interesting is that now is the first time in a while where I don't see any consensus among economists about what the life is going to look like, let's say end of this year or beginning of next year. If maybe a year ago there was a camp saying that soft landing, no inflation, and then another camp strongly saying inflation. Now I don't even see those camps, and it looks like everyone has stopped guessing, and we'll just see where the cycle takes us. So I think, of course, the valuations are down. They typically just follow public markets. Of course, they are more down in high growth stocks, maybe less down in more resilient assets, I don't know, cable operators, etc. but they are down across the board. It's an impact of many things. I guess primarily just a higher discount rate. And if public stocks are down, then you can't expect to sell your company at a high multiple to a publicly listed stock that is trading at a lower multiple, probably.
Maybe I can take a more global view, not just the Baltics, and I believe that it's the same what we saw like already the second half of 2022, especially if we take a venture, for example. There is still a lot of dry powder also globally in Europe, also as we saw in the Baltics. So there is actually cash to be invested, and nobody wants also this committee capital to just sit there. So it will be finally deployed. But what we see is that some top companies that are kind of interesting to many players, they hold on the valuations, or they don't drop so fast. But if the company is less interesting, or let's say not so good, then they have difficulties in fundraising. So I would say that in some sense it is even good that now better startups, better companies get the investment, and not necessarily on bad valuations. But if it is a weaker investment with questionable future, then it is really tough to get the second or third round.
Give us a number, Kristjan. Give us a number. Is it down 20, 30% down? No. Give us a number. Give us an example.
This is why I cannot give an example. I think it's even almost like 0 and 1 question that if it is not a company that the leading players want to invest in, it won't get the second round, not minus 30%, but at all. So it goes under, it's liquidated. Or if it is a good company, because there is enough liquidity, it gets financed, and because it has an option to hold on and maybe not to get in investors with bad terms, so they still have negotiating power. So it's not like minus 30, but it is either not at all, or you still get a pretty decent valuation.
Gerda, you need to give us a number.
From the person who's the only one non-investor here and the female one. Nice. No, but I would just add on like very good trend we noticed, and I think it's a lesson sometimes when everything started, like everyone just talked in the tech sector, like, oh, those companies overvaluated, they are gonna be bankrupt in no time. And we did not have that. I don't know about the rest of the Baltics. We did not have that in Lithuania. And actually no drama happened because companies weren't overvaluated. They were funded at reasonable terms. We always had like a bit, on average, a bit like lesser rounds than in Estonia or something like that. So it wasn't the case that we were like over financed and some companies. And we did not have the layoffs. We did not have the drama around that it's a crashing ecosystem, and we just we're just waiting for the good times, because last year we have not invested much in VC because they're fundraising, and now I hear like asset managers like, oh, next year we will invest. We have so many leads and it's good. So this is, you know, we did not have that crash, and because we were not like, it's sometimes good to be underdog than, you know, overvaluated. So it's just.
But let's ask differently. When would you said that you are an investor? When would you move? Is it 50% discount, and then you would? What is good discount for you? Then?
Actually, I have something to add, and then I put also this like a VC hat on. Actually, I'm not a VC, but what we have seen in Estonia is definitely there have been layoffs. Clearly, the large like our unicorns or would-be unicorns have done some substantial layoffs, but it doesn't mean that they are doing so bad, but it means that they want to prolong their runways. And this is precisely to have a better negotiating position with investors. So they have been very successful fundraising past 2 years, and they don't want to get to the market when it is down. So and they can at the moment cut their costs so that their runway runs not just 6 months but maybe more like 12 months, 24 months, and so on.
Just very briefly to add also to what Kristjan said now and before, that yes, there are still deals happening at very high valuations, and we've seen deals where people are bidding very high values, and in the end sellers decide not to do it because they think it's too low. And also the valuations are always a little bit relative and short term, because if the company is cash flow positive and is growing, you can see quite well how it grows into the valuation in 6 months, or there are some structures. Yeah, so that's true that for good quality assets, I think maybe the valuations haven't come down that much. A little bit like if you look at the biggest companies in S&P 500, they're still doing pretty well.
Okay, but there was also a question about failed capital calls. Somebody wants to comment about it, or if you say that it was 1.27, I think was a dry powder number, if I remember correctly. There was a question about it. Somebody of you wants to comment that.
I don't believe it will be an issue, because what does it mean then is that our institutional investors are not able to pay in the committed capital, but looking at our institutional investors, they are quite liquid and quite conservative. So we do not see at the moment a risk. And I think it actually can be extended to the whole Baltic market. And secondly, if we take a more global view, what has happened that some institutional investors have overextended in private equity globally, and they have to reduce their share. But then there is very active secondaries market. And the secondaries have also a lot of dry powder in Europe. Actually, they are looking for the deals. So therefore, it is like a cushion that first, if I need to reduce my commitments, then I go to the secondaries market. It doesn't mean that they are going to default the commitment.
Nobody? No.
Yeah, I mean, I think for example, in Latvia, pension funds are not allowed to invest more than 10% of their assets into alternative funds. So, yeah, probably they're not that overextended.
Okay, but then let's move to our last subject. It is gender, and there was, I think, that proposal from Sven about that to measure female founders' share of equity, if I got it correctly, but not generally. There is definite imbalance. So, Gerda, if you want to maybe kick off with this gender issue, what could be done to improve it?
Actually, we do few of the things everyone can try. Because we decided it's just, it's not enough, to just talk about it and raise awareness, but think of ways of how to, enhance those things. For instance, we launched last year a very good initiative with the other association. It's from female business and entrepreneurs kind of space. So that association usually raises awareness about those kind of issues, about gender diversity, balance into businesses. And we thought about the idea. So when we hear the talk that when we don't know any female candidates to the board, we would like to hire those, but we don't know them. We don't know any. So we decided, to put some very rational things into that. We created a database, a very good one, for particular female candidates to the boards, where our VCA portfolios could, search for. So this is a very good tool, very rational and very usable tool, Just maybe you actually don't know any female professional from the necessary field to fill the seat. So now you have the access. You can choose from like tens and hundreds of candidates. So that's nice, I think. What else? We do think that we should kind of work with those stereotypes around, and be proactive, not just raising awareness, but be proactive. For instance, we did had this internship program to the funds, and our internal goal was to select like as much as possible female candidates to have their internships, and we were like very positively surprised that around 30% of candidates, overall candidates to apply for those kind of internships, were females, and this is a good number. We can work on that. And when we launched our course in universities, university on private equity and venture capital, this is again our internal goal to spot those maybe female candidates that could start a career there. So it's proactivity, because when you are like a fund and you're waiting for, when you're hiring someone and waiting for the, females to come in as a candidates, it's very hard, because there are like a lot of stereotypes around that, and maybe they're not being driven there from the university years usually. So we had like some research around that usually maybe female in finances and in business administration studies, they choose a career path like in the first and the second year of the universities, and it's usually not like those areas that are actual like our area. So we need to grab those and say, hi, we're like a good employers, so this is a job, so this is the activity, and so be proactive and very rational kind of tools, to make this happen. And and I think within our organization is pretty nice. We do have like in the board, our VC board, it's like 3 females out of 7 board members. So this is really nice development, and to have that diversity within the board, then you can all think of many ways how to enhance that in daily life.
Okay, Kristjan?
Yeah, it's actually cool that we at least put this into focus. I think it's a second year now that we measure this gender balance, and without putting it into focus, we are not part of Nordics, because this is something so natural that you put focus on it. Of course, the numbers themselves are nothing to write home about yet, but there are more people coming to industry. I
will just give you an example. We're like always saying that it's bad numbers. Those are like not very good numbers, but when you see, the issue overall, like globally, I think there's like up to 2% of private equity as a class assets are owned by female investors. So this is the reality we are in. So this is not like 25% or so. This is if you look all the global assets under management, 2% are invested by decision makers are female. So it's not so bad. It's just I think it's been pretty good in terms of what we can see in other regions.
Yeah, this was the only statistic where Latvia was ahead positively. But still, of course, the result is very bad. I think it's below 20%. And in reality, there has already been so much research about the reasons behind it, and it's all known. Also, as Gerda mentioned, of course, there is an issue that sometimes the pool of potential candidates for finance of women is smaller, but that's also been known for a long time, and there are ways how to approach it. And I think I don't even know how much more talking it requires, but it just needs really action. And in some ways, given how low the numbers are, probably it means that you need to set non-gender blind targets and be positively biased towards hiring women, even though I guess it's not sometimes totally legal, but in reality, probably you have to put in extra effort to hire women.
Okay, but now we are waiting good questions from the audience. Tough questions, fast questions. Any questions?
If someone comment, how big interest show our close neighbors, let's say Finland or someone else, to Baltic market?
I think Poland is showing the biggest interest in, that's what I'm noticing.
True, but that actually boils down to what we were speaking earlier, that they have these glass walls that in their fund partnership agreements, either you do home market, that is not the Baltics, or a fund is too large and they rather invest into Germany and UK, etc. So that's one of the reasons. But actually, when you asked it, I recalled you asked about ESG during the reporting, and I had one idea. Otherwise, I will forget it. That I don't know. Do we have any Article 9 funds already?
Yes, I think. Yeah, contrarian ventures, I think.
Yes. So what we could start kind of highlighting in the report is how many Article 9 funds do we have, and which funds are Article 9? Because this is a very clear measure of how many kind of green-oriented funds do we have.
Yeah, actually, that's a good idea.
Okay, more questions? More questions? Oh, this is good audience. They know everything. So, pool of knowledge. They want to talk. Share their knowledge. Pull it out. Pull it out. Okay, but then it's socializing. And thanks a lot for panelists and.
Thank you. Thanks, Hanno.
Thank you for
Thank you.
coming.